All right, guys, welcome back. So weekly SPY technical update. So March 16th, today, Saturday. I'm just talking about this name. After March 15th, OPEX, big option expiration. A lot of options expired. Worthless, puts, calls. What to watch for next week? Next week is pretty volatile week. Historically, anytime when you see big option expiration happens, next following week, stocks move. Basically, they can move. A lot of hedging will happen, so people have to roll. And I'm seeing it already with SPX put to call ratio that I follow for SPX. Anytime I see these numbers spike way above 1.3, and that's what it has been happening for the past 6-7 trading sessions, which definitely could be people are just hedging further, rolling their positions. That could be it, or positioning themselves for some sort of a pullback, because S&P 500 is still near its all-time highs. So what I'm watching going forward, what levels I'm watching. So first, let's take a look at this chart on an hourly. So all-time highs, 518. These are the levels. Next week, we know of FOMC, NVDA event, and also biggest, probably last week, is bonds started coming down, right? A lot of economical data that came out. It was basically pointing out that inflation is a bit sticky and Fed may not cut rates until after elections. So if that happens, if the yields keep going higher, I wanted to show you before we jump into these levels. Let me just show you what was the last week's theme. Energy stocks best performing, real estate worst performing. We get that real estate is the very rate sensitive, okay? And then healthcare, technology, utilities were down. Two best: communication services, basic materials, consumer defensive. These were the best for the last week. And if we just take a look at the 1 month performance, you can see energy, materials, financial, utilities, communication services right here at the bottom. Consumer cyclicals, healthcare, and technology only plus 1%. So 1 month's performance of energy and basic materials and financials and utilities, industrials, it does already tell you that people are slowly maybe rotating into a little bit of a defensive area of the market. But I'm going to be quick with this one. So these are the levels I'm watching. This is, again, hourly charts. So this level were bounced on Friday, 508 for SPY. This is a 20-day moving average. If I bring it up, you see this blue line. Last time it traded at this level was after this OPEX. Do you remember this OPEX in February, where basically that Friday market was sitting near its highs, and come Monday, gaps down, goes lower, and we tested. Ever since, we haven't tested this level. So of course, if it does slip below, I'm going to be watching 505. And in that case, below 505, which is this resistance on an hourly, the support, I'll be watching 50-day moving average, which is near its 495, 496, okay? And if S&P comes down this much, that would be 4% pullback. Anything up to 10% is just a pullback, okay? Anything over 10%, well, we can call it correction. So we haven't had anything 4%, like maybe in the beginning of the year we had a little bit of a selling, profit taking. But so far, I think if we get back above this 5-day simple moving average, let me zoom in a little bit. You can see this level Friday opening 513, 514. That's the 5-day SMA. We're sitting at 20-day SMA. So if we take out this level, and if basically semiconductors try to pick it up, we can definitely take out this all-time highs, and we can push, maybe one last push, maybe squeeze a little bit more before FOMC, which is, let's take a look at it. I don't know exact date, but it is Wednesday, I believe. So Fed watch tool, 3 more days. Yep, 20th March. So nobody is expecting rate cuts. Okay, there's 2% probability of a rate cut, 98%. There's no probability of rate cut. So, but tone, how they're gonna message. I mean, how they're gonna talk. That's what everyone will be waiting for, and their balance sheet, right? Balance sheet talk, and most importantly, bonds. You want to keep an eye on bonds. I follow TLT, TNX, so that's why you saw a lot of like rate sensitive stocks come down. So I'm watching 92 for TLT. So if people start coming in to buy bonds, this should come down, and the yield should rise. Okay, so I'm gonna be watching TNX, which is at 4 something, give or take. 10-year treasury, 10.3% at the moment, 4.3%. So I'm gonna be watching that sort of a rate resistance. Okay, technically you don't do that, but I have this resistance from late February. So I'll be watching. If we do breakout, I think we can see some market pullback. But in terms of options, we already talked about this one, and a lot of people already bought puts. Put activity was very high. It could be very well people are hedging, but you can see how this 20-day moving average blue line has acted throughout this rally as a support. It hasn't traded below it for any more than a 1 day ever since we put a bottom somewhere here in October. So, but if it does slip 100%, I'm watching 50-day moving average as a support, which again 4.5% pullback. So these are the levels I'm watching for SPY, SPX. Thanks for watching. See you in the next update.